Dear students, this is T.Prabakaran, Assistant Professor of Commerce, St. Joseph's College of Arts and Science, Autonomous, Cuddalore. In this video, I am going to teach about final account with repeated adjustment. The final account, which consists of three parts, namely preparation of trading account, preparation of profit and loss account, and preparation of balance sheet. We are going to see in this video what are the repeated adjustment that will be taken place in the preparation of the final account, and we are going to see what is the treatment for the adjustment in trading account, P&L account, and balance sheet. The first one, closing stock. The closing stock will be appear at trading account credit side and balance sheet asset side. Then second one, outstanding expenses. Outstanding expenses is nothing but such expenses are yet to be paid. For an example, outstanding rent, outstanding salary, outstanding wages. So if the outstanding expenses which is given in the problem, which has double effect. One effect, it will be appeared in trading account or profit and loss account debit side by the way of add with the concerned expenses. The another treatment in balance sheet liability side. Then third adjustment is prepaid expenses. Prepaid expenses means such expenses are paid in advance. Such expenses are paid in advance. For an example, prepaid insurance, prepaid rent. It also known as unexpired expenses. Unexpired expenses. So it has two effects. One will be appeared in profit and loss account debit side. It will be shown by less from the concerned expenses, and another treatment in balance sheet asset side. Why we are deducting that prepaid expenses? Because such expenses are not belongs to the current accounting year. It may be belongs to the forthcoming accounting year, so that in the P&L account we are deducting the prepaid expenses amount. Whereas if we take in the outstanding expenses, such expenses are yet to be paid. When you are going to pay that expenses, automatically the expenses will be increased. So if there is a outstanding expenses, it will be added. If there is a prepaid expenses, it will be deducted in the profit and loss account. The next one, depreciation on fixed asset. Here in the problem they may be mentioned, provide 10% depreciation on plant and machinery, or 5% depreciation on furniture. So here the given percentage should be taken and it should be applied in the fixed asset, and we are getting the amount of depreciation. Now the amount of depreciation should be recorded in profit and loss account debit side as well as in balance sheet asset side by the way of deducting the depreciation amount from the respective asset. The next adjustment is bad debts. Such debts are not realized yet. The bad debts, unrecovered debts. So the treatment for the bad debts is, it will be shown in the profit and loss account debit side and the balance sheet asset side by the way of deducting the bad debts provision amount from the sundry debtor. Then last one, the provision for doubtful debts. In bad debts provision, the bad debts amount is directly given. We no need to calculate the amount. But in taken the provision for bad debts in the problem, they are specifically mentioned 5% or 10%. The provision for bad debts or doubtful debts should be calculated on the sundry debtor. So here we need to calculate the given percentage on sundry debtor. Now we are getting the provision for doubtful debts that will be shown in the profit and loss account debit side, as well as the provision will be shown in the balance sheet asset side by the way of deducting the provision amount from the debtor. So these all are the repeated adjustment. Here, whatever adjustment which are given in the problem which has double effect, it will be appear at two places. One, the trading account, balance sheet, or it may be profit and loss account and balance sheet. We are going to see one simple problem with adjustment. Problem number 15. From the following trial balance of Ravi, prepare trading and profit and loss account for the year ended December 31st, 1993 and a balance sheet on the date. In the trial balance, the informations are given: capital, sales, purchases, salaries, rent, insurance, drawings, machinery, bank balance, cash, opening stock, debtor and creditors. Then, in adjustments are required. The closing stock on 31st December 1993, rupees 4,900. The salaries unpaid 300, rent paid in advance 200, and insurance paid 90. So this is a given in the problem. Based on this information, we are going to prepare the final account with the necessary adjustment. So here, the trial balance is given. In the trial balance, the informations are given. If any information given in trial balance which has a single effect, it will be appear at any one of the place. That may be a trading account, profit and loss account, or the balance sheet, according to the nature of the information which is mentioned or given in the trial balance. We are going to see the solution for this particular problem. Here, first of all, we have to write a proper heading: trading account and profit and loss account of Mr. Ravi for the year ended 31st December 1993. First of all, here we are going to prepare the trading account. After the preparation of the trading account, we are going to prepare the profit and loss account and then balance sheet. Now, the first one, the trading account. The trading account, it starts with opening stock. To opening stock, 5,200. The next one, to purchase, 15,000. Then in credit side of the trading account, by sales, 25,000, and by closing stock, 49,000. Now, there is no any other direct expenses which are mentioned in the problem. Now I'm going to close the account and I'm going to get either gross profit or either gross loss. Now, so here, when you are seeing this trading account, we can able to understand the credit side is greater than the debit side. So we are getting the gross profit, which is 9,700. Then let's moving to the profit and loss account. In profit and loss account, first of all, we are going to record the gross profit or the gross loss which is ascertained in the trading account. Now I'm going to enter the gross profit in the credit side of the profit and loss account. Here the profit and loss account is a nominal account nature. In debit side we are going to record all the expenses and losses, and in the credit side we are going to record all the incomes and gains. Now the expenses to salary. So here there is an adjustment which is given in the problem, that is the outstanding salary. The salary is unpaid, rupees 300. So the outstanding salary treatment, it will be add with the respective expenses in the P&L account. Now I'm going to add the outstanding salary with the salary amount 2000. I'm going to record the 2300 in the outer column. The next expenses to rent. Here in the rent amount there is a prepaid rent rupees 200. This amount will be deducted from the rent amount. Why we are deducting? Because this 200 has been paid in advance. This amount is not relevant to this current accounting year. So we are deducting from the 1500, the remaining amount 1300 shown in the outer column. The next one, insurance 300. In insurance, rupees 9 and rupees 90 is prepaid insurance. The prepaid is also called as unexpired insurance. So it will be deducted the rest of the amount shown in the outer column. Now I'm going to close the profit and loss account. When you're seeing the profit and loss account, the credit side is greater than the debit side. So now we are going to get the net profit, that is 5,890. The next one, the preparation of balance sheet. Balance sheet of Mr. Ravi for the year ended 31st December 1993. Now, in liability side, we are going to record the capital amount. With capital, we are going to add the net profit. If we are going to get the net loss, means that has to be deducted from the capital account. If there is a net profit, means it has to be added with the capital account. So in the problem they are mentioned drawings. Drawings means what? The amount which is taken by the proprietor for his private use. So this amount should be deducted from the capital amount. The next one, the creditor. The next amount, outstanding salary. Here the adjustment outstanding salary, which has double effect. One effect we are given in the P&L account by the way of adding, and second effect that will be given in the balance sheet liability. Then moving to the asset side. In asset side we are going to record the assets in the order which is given in the balance sheet. Machinery, bank balance, cash amount, debtor. The next one is the closing stock. The closing stock, which has double effect, it will be appeared in the trading account credit side as well as in balance sheet asset side. The next one, prepaid rent. It is an adjustment. It also appeared at two places. One in P&L account debit side by the way of deducting the amount from the respective expenses. The another effect shown in the balance sheet asset side. Then prepaid insurance, the same treatment, one effect in the P&L account, deduction from the respective expenses, the another treatment in the balance sheet asset side. Now we are getting the balance sheet is getting tallied. The liability total and asset total, the both totals are getting equal. So these all are the repeated adjustment that will be taken place in the preparation of final account. Thank you.